Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hanks. Let's dive into the overall market. We got to keep one eye on the markets at all time when things are on the move. And I think we're going to have a little bit of good news for the viewers. I'm seeing a lot more green than I saw a little bit ago, with the S&P is now up 6, the NASDAQ up 52, and even the Russell 2000 is up 1.25 points here. So we'll keep our eyes on that. Things are choppy but stabilizing after a very volatile session yesterday. Joining us here in studio for our cash tag segment is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Andy Swan is with us. Guys, we're going to talk some Adobe. This is a company that I remember back when I was a child having, the Photoshop and Premiere Elements. We were trying to make little YouTube videos and stuff, and you had to buy the products for like $500 every single year. Now they've kind of figured out the system. You just subscribe to it, and they give you the newest version. And I think that it's been such a win for investors, for the company, but really for consumers as well. And whenever you can kind of go win, 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 I think it's just great.
Okay, well, first of all, I applaud you for knowing how to use Photoshop as a child, because those are difficult, applications to use. And I think that's part of the reason, actually, Adobe has such a strong customer base, because once you sort of learn, say, a Photoshop or a Premiere, you kind of stick with it. So there's that stickiness there. But again, that subscription model has been boded very well for them, as we've seen them beat earnings in the last 2 years. And they're expected to report earnings actually today. I would argue one of the biggest reports of the week. And they're expecting about $3.9 billion in revenue on about $3 a share in their adjusted earnings. So this follows the second quarter report, when they pretty much beat on all cylinders. And a lot of this is due to what Alex just alluded to, and that is their subscription model. They've really done a good job successfully transition into the subscription-based model, which has resulted in very strong recurring revenue, which has allowed them to invest in new products, but also new technology. Now they're sort of dipping their toes into AI and also machine learning. So not only are they becoming a stronger company, they're becoming a smarter company. Now, they've also benefited from some of these broader trends we've seen just in the technology space. As we know, any sort of exposure to the cloud space is hugely beneficial to your company. This has also been sort of reflected in its stock price. As of recently, despite yesterday's dip, it moved about 2% lower. The stock is up about 28% year to date. Now, it has fallen this month and this week, which I actually think presents itself as an investing opportunity, given the fact that this stock has run up pretty much consistently over the last year and a half. But what I really like about this stock is it's sort of positioned itself well to be very, very important in what we consider this new normal working world. So a lot of companies have pushed back their January 2022 start date for their employees to return to office. A lot of companies have said we're just going to operate under this hybrid model going forward. And I think Adobe offers a product suite that is sort of catering to this hybrid work world. Some of its popular product suites include the Creative Cloud, the Document Cloud, the Experience Cloud. Again, cloud sort of being the buzzword there, but they offer a lot of people to successfully work from home, which I think is a trend that is here to stay. Plus, they had some news last week, which I wanted to mention. I know this will not be in this most recent earnings report, but that they're actually getting into the e-payment space in a partnership with PayPal to sort of challenge one of their biggest rivals, which is Shopify. So I thought that news was interesting and something that investors sort of reacted positively to, although it will not be in this third quarter report. Now, our first tweet of the day highlights the fact that this stock has run up. All of the positive things I just mentioned, there's a lot of feeling today on social media that it actually is already priced into the stock, and it's fairly valued, if not overvalued, at these current levels, which is what our first tweeter today says, who says, if you're waiting for Adobe shares to get cheaper on a historical basis, it ain't happening unless the competitive intensity changes dramatically. At that point, you probably won't want to own it anyway, which actually transitions very well into our next tweet, completely unrelated, but sort of similar sentiment, which says, Adobe, after 14 straight weeks of getting paid, the candles told me to sell with a bearish engulfing. Could just be a reset into earnings next week, not sticking around to find out. Good luck if you are holding, though. So it seems like people aren't necessarily super down on Adobe's actual software and, the actual product it sells. They're just sort of down on the fact that this stock is right now outperforming the broader tech sector and has just run up pretty strong over the last few months. Now, Andy, I know you have data on their cancellations and people signing up for subscriptions, and I have to say, I have been a victim of the cancellation of Adobe, and it's so difficult that it almost just makes you want to stick around. So I'm curious if your data reflects that at all.
Yeah, I think it does. It's one of those kind of like we all experienced when we first had gym memberships. It's really easy to sign up and really tough to get out of. That's what Adobe is, but it's not necessarily just because they make it difficult to cancel, but because so few people want to cancel. This is a very, very popular product with people. It has extraordinarily low levels of competition, which is why I think really separates it from the last couple of weeks we've talked about a company like Zoom in a very different light, where it pulled forward demand and now can it retain those subscribers, where Adobe, truly benefited from that pull forward demand that happened in 2020, the work from home, because people just don't quit this service. If we look at that signups versus cancellations, the labels could have been bigger on this chart, but the green line is number of people talking about newly subscribing to Adobe suite of products, and the red line is number of people talking about canceling. And you can see that that gap just keeps getting wider and wider. So that means that they continue to add more and more subscribers to their base that are paying them every single month or every single quarter, every single year, however they're being billed, and they're really just not canceling. And so what that does is builds an enormous subscription base. I think it's over 92% of Adobe's revenue comes from subscription revenue. And so what happened over the last 4 to 6 months really benefited companies like Adobe, who not only captured that pull forward demand, but were able to retain the customers and put themselves in a position to bill them more and more over time, because the customer is so happy and has so few options to leave for a competitor.
Andy, help me here, because I'm trying to find something wrong with this company to even temper my enthusiasm, because everything I read, not only is like a lot of companies that we've talked about in the show, the economy moving towards Adobe, but they're inking contracts, and they're inking contracts with huge companies. I mean, high profile companies like Nike, Microsoft. They just inked a deal with PayPal for secure payments that's coming up at the end of the year. So they're not just booking customers, they're booking massive corporations into this deal. And you've got to help me find something negative other than has the stock just run too far too fast? Because everything I read about this company, they're doing everything right, Andy. Find me something that I should hesitate on.
The only thing I think you can hesitate on is the stock price. We've been at LikeFolio, we've been bullish on this stock, I think, for a little less than 2 years. It's more than doubled in that time. One of the reasons we got into it initially is just what you're talking about, because that it's not just Illustrator and Photoshop. They are expanding their technological offerings and partnerships in a big way. They have technology that enables Roku to identify and send personalized advertisements, and allows advertisers to target people on a very micro level through a Roku type of streaming platform. I mean, this is a company that isn't just satisfied with the product suite that they have, but they continue to step outside of that and execute very well. So, Kevin, I'm sorry, I can't come up with anything that makes me want to bet against the company from a product or execution standpoint. It's just really not there. It's really just, is the stock too high? And that's, for others to figure out. But from a fundamental perspective, this is one of the best in the world.
So I completely agree. It's really hard to find a negative with this company. It's sort of like Microsoft's offices, where you have Excel and Word, where I don't really know even what competes with that. I feel very similar to Adobe and their creative suite. And so, Andy, I guess I'm curious if this has given them pricing power, because I have to think that with at least what I can't think of as little competition in this space, if they could just hike their prices and say, we're best in breed, I think I would pay pretty much any dollar amount to download or have a subscription to a software that I'm familiar with and that also I love.
Yeah, I think that they have extreme pricing power. I think they'll be judicious with it, because they don't want to make people mad or feel taken advantage of, but they do have clearly, with consumer happiness levels at LikeFolio have never been below 75%, currently above 82%. It's just unheard of in subscription software. And so they do have pricing power. I don't think that they'll take advantage of the consumer. They seem to be really thoughtful about the way they do things. All of their competitors have lower price points and are free, and people still don't want them because the Adobe product is just better.
Andy, question for you real quick before we say goodbye. I'm trying to find, what is a takeaway from their dominance, and one that I'm sort of, trying to tackle in my head here, wrestling with back and forth, is what this means for a company like DocuSign, which we know has really proved a concept and established relationships across really the economy worldwide in terms of secure document kind of acknowledgement and things of that nature. But we know Adobe's trying to get involved in this and is involved in this space. Given their relationships with high-profile companies, can't they do a little bit what Microsoft did to Zoom, which is, hey, we'll just give you Teams, just don't use Zoom and stay with us? The same way, couldn't Adobe sort of do this with some of these big companies too, to kind of put a little bit of a stranglehold on DocuSign?
Yeah, Alex, I think it's almost like you belong in the Adobe boardroom, because I'm sure this is the conversation that they're having. Do we acquire something like DocuSign and just take the customer base and just say we own it, or do we try to kill them, and do we do so through that strategy like Microsoft did with Teams? So I think that's probably a decision point for them coming forward. They're probably waiting to see how much they can get out of their document management software as it stands. But if that starts to falter, and if you ever see DocuSign, get a real big haircut in the market, I would think that Adobe and Microsoft would both be potential suitors for that company, because it does seem to need one of those bigger partners, to really get out of its own way. But again, a good company. But yeah. Adobe is in a position to make those decisions slowly and carefully, and the history of the company is they make them really, really well.
Well said. Yeah, any type of single service product or company is going to be a little bit more at risk inherently than something that has a diversified portfolio of services and products. So DocuSign's very interesting, one that we'll keep our eyes on, and I'm excited to see how this all plays out for both that company and the rest of the space. But Andy, we'll let you go. Thank you as always, the co-founder of LikeFolio.com.